Hello, this is John Cavalli, and this is your December 2013 market review. I've got good news and bad news. The good news is we've got new equipment. Hopefully this will work out and be a little bit better. The bad news is this new equipment's probably going to pick up on the fact that I'm just getting over a little bit of a cold. But here we go. So hopefully you will enjoy this. And I wanted to go over the post that this video is embedded in. And without stealing too much of what's going on in the newsletter, I do want you to watch out for the newsletter, and I think I'm going to do a video with the newsletter as well. But the big news in December was that Bernanke started removing the punch bowl. Boy, he's been all over the place. First he was going to in the summer, and then he decided not to. And bear in mind that Janet Yellen is about to take over as of the recording of this, so it's just about game over time for him. And the most important item that we all are watching for is the effects of interest rates. Now, I come out in the newsletter, forthcoming newsletter, and visit a little bit and discuss a little bit about the fact that so many of us, including myself, are currently looking at interest rates, that interest rates are probably not going to be the problem that we think they may be. That being the case, I am still very focused on interest rates. We are still very focused on interest rates as a firm, as well as most of Wall Street as well. And the reason being is if interest rates make a huge jump and have a very large, fast move, it's going to create a ripple effect. We're not worried about that right now, but it could happen. December continued. The Goldilocks or Little Red Riding Hood, I'm trying to be a little bit funny here in the reading, and hopefully you will read this, but this is a great chart from JP Morgan, and this is going back for 20 some odd years, and this down shows the drawdown of the year. Last year we had a little bitty hiccup, a -6% hiccup, and we were positive over that period of time. So we never saw a red market. We never saw red at all. And this is highly unusual. Last year was just an unbelievably accommodating investor market. I hope it continues, but I don't expect it. Now, being a little bit funny, and to conclude this video, what we always recommend is diversification. We will continue to stick to our guns as diversification. I'm being funny with this picture, but diversification. We can't go all in on any one asset class. That means it would have been great to be all in equities last year because the returns would have been great. But when they turn around, you don't want to be completely in equities because the ride can be very, very treacherous on the way down as well. That's it for your December video. Thank you very much. I hope you enjoyed it, and we'll talk to you again soon. Thanks.